Well, while talking about India's economy, it's important to update our viewers here that the RBI has also come up with the new figures when it comes to, let me just put the figures out on the screen for our viewers on that. We are talking about the announcements made by the RBI governor, where RBI has hiked its key repo rate by 35 basis points. This after 3 consecutive hikes of 50 basis points. The Monetary Policy Panel deliberated on this hike. RBI Chief Shaktikanta Das also added that inflation will stay above target in April-June. The central bank has also revised its GDP growth projection to 6.8% from 7%, adding that economy continued to gain strength in October and that the rural demand is now recovering. He added that the economy cannot remain entirely decoupled from global slowdown. Let's listen in.
Now, the Monetary Policy Committee meeting met on 5th, 6th and 7th December. Based on an assessment of the macroeconomic situation and its outlook, the MPC decided by a majority of 5 members out of 6 to increase the policy repo rate by 35 basis points to 6.25% with immediate effect. Now, I think this is one occasion where the market expectations and the decisions of the Monetary Policy Committee are by and large aligned.
Important to remember is that since May of this year, interest rates in all have been hiked by about 2.25%. Out of this, on an average home loan, about 80 basis points have been passed on to the end consumer. 100 basis points makes a percentage point. What does it mean for you and me? Well, as expected, home loans become even more expensive because your interest rates have gone up. Your personal loans become more expensive, and you might get a little more for your fixed deposit as well. But the biggest hit continues to be for those who have taken home loans. Let me give you an example. The average home loan rate in the State Bank of India, the country's largest bank, is about 8%, a little more than 8%, while a 5-year interest rate for a fixed deposit where you will get money is 6.1%. Especially for those who have taken a home loan recently, that means in the last 5 years, this is going to hurt even more, because in the first few years, when you're paying back your home loan, you're essentially paying back the interest component and not the principal. And if interest rates keep going up, that means even if you make all of those payments, the amount you owe back to the bank doesn't really reduce. So what can you do to reduce the impact? For one, you can increase the tenure of your home loan, pay it for a longer period of time. You can shop around for a cheaper loan from competing banks. And if you have some money saved up, for example, in a fixed deposit, which is not giving you such a great interest rate, you might as well remove that and prepay some of your home loan.